Going by the declining trend in the nation's economic growth, the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, NACCIMA, says Nigeria might fall into a third recession by the end of 2022 if the federal government does not urgently implement macroeconomic policies to prevent it. National President of NACCIMA, Mr. Ide Udeagbala, made this known in Lagos at a press briefing to review the state of the economy and NACCIMA's position on issues and policies. While addressing journalists, Mr. Udeagbala explains that Nigerian economy grew by 3.98% in the fourth quarter of 2021, a drop from 4.03% in the third quarter and 5.01% in the second quarter of 2021. He, however, called on the legislative and executive arms of government to work together by taking urgent steps to reverse the current trend of increasing public debt and declining economic growth.
The Nigerian economy is operating below its productivity capacity. As reflected in the high unemployment rate, we are struggling to meet our economic development objectives. We once again reiterate our awareness of the increased pressure on government to generate foreign exchange and shore up foreign reserves. And we call on government to look to non-traditional sources of foreign exchange. While foreign direct investments and remittances from the Nigerian diaspora are the obvious alternatives, the demand for technology products and talents provides an opportunity for that sector to become a significant source of foreign exchange.
The Bureau of Public Service Reforms has held a forum on managing the country's financial resources. The focus was on reforms for public financial management, as well as the successes and challenges with a view to charting a way forward. Lara Afolayan reports.
The COVID-19 pandemic grossly affected the country's financial resources. The development emphasized more than ever before the urgency of prudently managing public funds alongside looking to having a future without oil. This meeting by the Bureau of Public Service Reforms is focused on the country's existing financial management strategies, successes, challenges, and the way forward.
Public financial management reforms mostly prioritize technical approaches to improve the performance of public financial management systems, including through the integration, modernization, and automation of public financial management processes.
The country's budget office enlightens the gathering on the nation's fiscal balance and efforts to manage expenditure vis-a-vis generated revenue.
Our number one and most important challenge is deteriorating fiscal balance. And this is the picture that it shows here. Okay, from 2015 to, you basically see here, we have been in negative territories.
The far-reaching implication of this is broadening the revenue base through non-oil resources.
So if we want a sustainable, fiscal, position, we cannot rely on oil. And so we must move away from oil. But, our situation has been compounded by what we call regressive fuel and power subsidies.
Meetings like this are to drive the BPSR's move to educate citizens on issues affecting them, to deepen their knowledge and understanding. It is to encourage cross-fertilization of ideas in line with its reform implementation efforts in the public service.
Of interest to us and the citizens, based on the impact assessment that we have done on these reforms, will be what are our achievements on this level and what are the challenges and way forward, and how can we get Nigerians to support this massive reform initiative.
Economic watchers have several times advised the authorities to intensify efforts at fiscal prudence to reduce expenditure deficits and borrowing. Lara Afolayan, TVC News, Abuja. The newly appointed Managing Director of a co-electricity distribution company, Dr. Tinuade Sanda, has assured the company's customers in Lagos State of improved service delivery during her leadership. Mrs. Sander, who made this known during a town hall meeting with customers from Ijora Network, maintains her core responsibility is to steer the leadership of the company and the entire EKEDC team to ensure operational and service excellence to customers. Blessed Amonose reports.
In today's ever-increasing competitive business environment, building effective customer relationship cannot be overemphasized, as this has been considered to be one of the bedrock of a successful organization. To this end, the management of ECO, Electricity Distribution Company, has put together this one-day customer engagement forum for its consumers at Ijora Badia, Surulere, Tejuosho, Yaba and Ojuelegba. One after the other, the aggrieved customers expressed their agitations and grievances on issues bordering on estimated billings, poor power supply, inability to get prepaid meters after payment, amongst others.
I wrote the letter that said I should go online. I went online. They are coming till today, no pay. And the bill is so professional, I felt like, okay, come and remove your wire. I can't come again.
Responding to their complaints, the managing director of EKEDC, Dr. Tinuade Sander, explains the step taken by the company to resolve their peculiar needs.
At every touch point, we are all customer service representatives. Either you're in finance, either in technical, we are all here to serve our customers. And we need our consumers, our customers, to report such acts. Where you've seen customers, where you've seen our staff not acting in a professional manner, we need to know about it, we need to address it.
However, adds that this engagement forum is aimed at listening to the concerns and challenges customers face concerning the level of services they offered and immediate solutions provided in some cases.
We have listened to them, we've heard them, and we have taken on board the complaints, and I can assure them that they will start seeing positive improvements in the way we render service going forward. We've opened channels of communication. We've advised them on platforms to use to engage with us better so we can service them better going forward. And also with respect to energy theft, vandalism, we've also advised on whistleblowing website and numbers they can lodge some complaints to. With respect to estimated billing, we've also requested that they should kick on and sign on to our MAP platform so they can be metered within 10 days.
As this forum comes to a successful close, these electricity consumers are hopeful that deliberation made here will bring about lasting solutions to all contending issues. Blessed Omonose, TVC News, Lagos.
Weekend trades at the stock market ran full bullish course following huge gains by companies. Effiongekop reports on markets.
Exciting trades moved across sectors of the stock markets following running bullish activities where many companies hit huge gains. Top equities contributed to market growth including Honeyflower, Transcorp, GT Holdings and Airtel Africa. Large volume of securities in excess of 6 billion units were traded with the value hitting over 30 billion naira. Many fund managers thoroughly positioned the investment basket across blue chip lines. The bullish trend threw the index upward by 1.62%, stressing gains on investments. Name Insurance gained maximum 10% at the close of business, while Academy Press, Cadbury, Champion Berries and Julius Berger made reasonable gain. On the downside of trades were NPF Microfinance Bank, Trans Express, Eternal Oil, Cornerstone Insurance and Dangote Sugar. Efyong Ekop, TVC News, Lagos.
Shares are set for their best day in 6 weeks today, led by Chinese tech stocks after reports of a possible resolution to the Sino-US audit dispute, giving investors much-needed respite from worries of a global economic slowdown. Hong Kong-listed tech stocks rose as much as 10% today as trading resumed after the lunchtime pause. E-commerce players JD.com and Alibaba each rose as much as 15%, and Meituan gained around 12%. All three are listed in both the U.S. and Hong Kong bourses. They and their peers' stock prices had been affected by U.S. moves to delist Chinese companies because Beijing restricted the U.S. audit regulators' access to their audit document. The gains from Chinese index heavyweight sent MSCI's broadest index of Asia-Pacific shares outside Japan 1.9% higher, which would be its best day since March 17th. However, Nasdaq futures fell around 0.7% in Asia trade, pressured by disappointing earnings from Amazon after market close. European futures rose 1.29% and FTSE futures advanced 0.86%. Today's gains marked a recovery to the brutal sell-offs in global stocks in recent weeks. Finally, in business, oil prices on the international market are mixed today as China's COVID-19 lockdowns weighed on the outlook for crude demand, although supply disruption fears as Western sanctions curb crude and product exports from Russia underpinned prices. U.S. West Texas Intermediate crude recorded a price increase of 0.65% to hit $106 per barrel. Brent crude now sells at $108.70 per barrel, registering an upward price margin of 1.02%. Burning Light's performance is back in the green territory with a price uptick of 2.42%, selling at $107.10 per barrel. For the OPEC basket, crude oil dealers offer $105.30 per barrel, recording a surge in price of 2.32%.